This is Ru Malave, Malave Real Estate. Today, we're going to go through the government programs for first-time homebuyers. So, first of all, I'll start by saying this. If you put all these programs together to your benefit, you could save up to 30,000 plus dollars. So, first of all, why do these programs exist? Well, buying your first home can be challenging, especially in high demand areas like Burlington. So the Ontario and the federal government together a range of programs to help first-time buyers reduce the upfront costs and improve affordability. So we'll explore each one of those today. So, so this is a kind of an overview, right, of the four main programs that can save you 30,000 plus dollars: the land transfer tax refund, the HBTC, FHSA tax savings, and the HST rebate. So we'll start with the Ontario Land Transfer Tax Refund. It's available for first-time home buyers purchasing a home in Ontario. You get up to $4,000 back on your land transfer tax. This only applies again to first-time buyers who haven't owned a home anywhere in the world, and it could be applied immediately upon closing, reducing out-of-pocket expenses like moving trucks, lawyer fees, etc. So how does it work? So for example, let's say you're buying a home in Burlington. The home is 900,000. So you have to pay land transfer tax now as a buyer, which would come up to about $15,000 or 14,500. So after so you get a $4,000 rebate on that. So instead of paying that 15,000 in land transfer tax, you put 4,000 back in your pocket and only pay around 10,000. Number two, first home savings account, your FHSA. So a new registered account allowing first-time buyers to save for a home tax-free. Contributions are tax deductible, like your RRSP, and withdrawals for a qualifying home are tax-free, similar to your TFSA. Annual contribution limit is 8,000 and the lifetime limit is 40,000, and it could actually be used together with the home buyers plan, which we'll go over. So the first home savings account, here's how it would work. So Sarah earns around 85K a year, and she puts 8K away every year to her FHSA. Her taxable income is now reduced to 77,000, lowering her tax bill by roughly 2,000. So she invests the funds over 5 years, reaching 45K with growth. When she buys her first home, she withdraws the funds tax-free and saves $7,000 plus in taxes. Now imagine you're in a higher tax bracket and you apply these FHSA as a tax deduction. How much more could that save you, right? Thousands of dollars. So next we talk about the home buyers plan, the HBP. This allows first-time buyers to withdraw up to 35K from their RSP. So that's 70K per couple. That's huge. So no tax is withheld at the withdrawal, provided the funds are repaid within 15 years. And this could actually be combined with the FHSA for a larger down payment. So here's an example. Alex and Maria each withdraw 35K from the RSPs, 70K in total for their first home. They use it as a down payment on their new home in Burlington, which is 900K, heavily reducing their mortgage insurance costs because they have a larger down payment. So they repay about $2,300 over the next 15 years to their RSPs, effectively paying themselves back while owning a home sooner. Next, we have the first-time buyer's tax credit. So it's a federal tax credit designated to help with closing costs. So it's a non-refundable credit up to $1,500 based on a 50% of a $10,000 claim, claimable on your tax return for the year you buy your first home. So again, end of the year, you file your taxes. If you bought a home, $1,500. If you didn't know about this, you don't get $1,500. But if you do, you can apply it. It doesn't cost you anything, but you just have to know about it, right? That's why we're here. Next, we're talking about the first-time home buyers tax credit, HBTC. So again, Emily buys her first condo in Burlington and claims a 10K credit on her taxes. Her refund increases by $1,500, helping offset legal and moving expenses. Lastly, we'll talk about the GST HST new housing rebate. So this specifically applies to new build homes or substantially renovated properties. So rebates, part of the HST paid, up to 36% of the federal portion, 5% portion of the provincial part. So the builder may apply the rebate directly, reducing the purchase price. So for example, how does this work? You buy a new build townhome in Burlington for 950K, including HST. You're eligible for a rebate of roughly $24,000, depending on the builder participation. So this lowers your effective purchase price to $926,000, a major advantage to buying new construction homes. So here's some common mistakes for you to avoid. Number one, missing deadlines for program applications. Number two, failing to repay HPP on time. So there's taxable consequences, right? Talk to your accountant. Number three, overlooking FHSA eligibility or contribution timing, right? So depending on the time of the year and when taxes need to be filed, you need to have those contributions so you can max out your limit. And number four, assuming all rebates apply automatically. Some require filing or forms, right? So here's a summary of the program. I'll leave this in the description for you. You can go through this yourself. Again, there's a lot more that goes into buying a home. I know this is not the most exciting things, but it can help you save thousands and thousands of dollars. So please reach out to me if you have any questions. I'd love to help you out.